is up, YouTube? It's Williams FX right here again. Good morning, good afternoon, good evening, wherever you are in the world watching this video right now. You might be watching this video 2 years after this time and watching this video 1 month after this time and watching this video a few hours after it's been recorded or uploaded. I want to congratulate you because you've just found yourself a gem. This video will be talking about order blocks. Now, I know that there are lots of videos on YouTube that talk about order blocks, and the problem many people face is, why do we have to pick these order blocks? What criteria do you check for an order block to be a valid order block? We have so many order blocks that you look at, and sometimes the market just goes by these order blocks and don't pick them. And then the question is why? What are the criteria? I'll try to make this video short as possible, maybe 3 minutes, but I just want to ensure that you get the hang of it on why order blocks are important. Now, when we are learning candlesticks, let me just put that there, order blocks. When we're learning candlesticks, we learn something like engulfing bars. We learned engulfing bars. What you see right here is an engulfing bar. And they said, when you see an engulfer, it shows you that there is more momentum in that market. So when you see a bullish engulfer where the body of the bullish candle totally covers the body of the bearish candle, then we call it an engulfer. So this is a bearish candle and this is a bullish candle. This one came down bearish and this one came up bullish. This one came up bullish and this one came down bearish. So let me try to change this color to red as well. Yes, and this is the bullish one, right? So I change this one to red as well. So you understand what I'm saying. So this is the bearish candle and the bullish candle, and the bearish candle. These are engulfers. Now, when you see this engulfer, you say, oh, there's a bullish momentum in the market. The market is trying to move upward at this time. And when you see something like this, say there is a bearish momentum. But at that time, people didn't really understand how those candlesticks were formed, the kind of money that were pumped in the market, the thought process behind the institutions that actually moved that market. So they just called that an engulfing candle. Those engulfing candles were actually areas where institutions were picking orders from. And if you look at it deeply, you realize that when the market creates an order block like this, or like this, it actually comes back into the order block to pick an entry. So let us say the market creates an order block like this, and we mark it just like that. I need to set up my colors back to, let me use a random, this color is too bland. Let me use this and then fill it up with, oh yeah, so let me fill it up something lighter. Oh yeah. So when we have this, the market pulls up just like that, pulls up and then comes back to pick this and then goes bullish. Okay, naturally, that's what the market does almost every time. It comes back into the order block to pick the order and then move the way it wants to move. And then moves the way it wants to move, right? Likewise, for the bearish scenario, if the market is bearish, we'll have the order block like this. The market comes right down, pushes right down, and then still comes back into the order block to fall. Why does it come back into the order block? That's another question that a lot of people ask. Why does the market come back into the order block? The order block was not created for fun. It was created because there are loads of orders there, and the market wants to push a lot of people into the market. Now, typically, the market will not just go down like this and come up and enter this order block. No, the market will do something like this. Come down, come to this point, create areas like this, take out the eyes. So create levels where people will feel they can still enter the market and then come into this place to take out all the eyes, because we believe in break of structures, and then finally falls down, right? So what the market does technically, you know, when we are in an uptrend, the market will do something like this: break this eye, retrace, break the eye, retrace, break the eye, retrace, break the eye, retrace, which is the higher highs and higher lows, right? Now it's the same thing here. For this, the market will create some breaks here, internal breaks, and then move up. So apart from the big structures on the 4-hour and the 1-hour time frame where we have breaks, there are internal break of structures in smaller time frames that the market creates to create patterns, double tops, triple tops, double bottom, triple bottoms. These areas are called liquidity. The market takes out these areas and then comes to our order block and then dumps. So basically, that's what the market does with order blocks. When the market creates an order block, always expect the market to come back into that order block and fall down. That's my thought process, basically, with trading order blocks. Well, it's more deeper than this, but that's basically my thought process with trading order block. So let's go right into the chart and see some of it for ourselves. As you can see, I'm on the 4-hour time frame. I want to look for areas where the market created order blocks and actually took those order blocks very seriously. Okay. So here we have, now look at this. The market created an order block here, right here. You can see this order block. That's an engulfing bar right there. So I'm just going to put this, instead of drawing that whole thing, I'm just going to put this on the top of it there. You can see it's just at the top there. So we see what the market did at the top of the week, right? So now the market will definitely come back to this place and reject, even if it's for 20 pips or whatever, it's going to reject, okay? That's order block created there, the last down candle before the engulfing bar. If you look at it, the market did not really create any other block before that point. It created here, right here, last bearish candle, and you can see that the market came back into that bearish candle here. Look at it, look at the top there. You can see that top. The market came back into the candle. You can see from the top of the bottom of the market came back there and rejected and moved and moved and moved. So if you wanted to take this trade, if you looked at a trade like this and you wanted to jump off this order block, for example, and you took that trade, which there are other confirmations that you will take definitely before you enter this trade, but let us assume you took this trade and you wanted to catch it to this top here, you'd have caught 167 pips, which is a very good one. And let us see what the market did with this order block here. You can see that the market came right back into the order block right there. Let me mark the bottom of the order block and let us see how far it went below. It didn't go very far below, right? The market just touched the other block like that. If we mark it like this, you see it. The market just touched the other block like this. Just like that. Like that. And just came out a little bit. So there's always space for allowance. So imagine you took this trade off this point, even though I don't advise anybody to take a trade off the 4-hour time frame. Please never you take a trade off 4-hour time frame. It is not advisable. I personally take my trades on 5 minutes, 3 minutes, and 1 minute and 1 minute time frame. So let us say I put my stop loss here. That 80 pips, 86 pips stop loss. I will never ever do that in my life. And then I'll be targeting above these highs for my take profits. Above these highs for my take profit. That's where I'll be targeting definitely. So let us look at the before structure and see if there are anything. Okay, if I don't even target above the highs, I'll target equal highs, and that's 600 pips. Straight move there, 600 pips. Straight move to the top side there, right? 600 pips. So you are catching 1 to 7. That's a very, very beautiful one to catch. All right. So basically, that's the way other blocks are. Let us look for another other block, maybe the one to the downside, and see how the market reacted to it. Okay. Currently not finding any serious order blocks. Let me go to the 1-hour time frame. Okay. Look at this. Market created an order block here. You can see the engulfer right there. The market created another block, and you can see the market came right back to the other block and dropped. Even if you want to catch these small pips to the equal lows there, you would have still caught at least 100 pips to the downside, right? Easy. And look at here, the market created another block. The market has not come here yet. The market has not come here yet. Right here, that's an order block for you. If the market decides to come back there, let me zoom it in. Let me see if the market has come there yet. The market has not come there yet. I see the market is giving us that uptrend vibes. So most likely we are looking at the market to come into this order block to come into this other block and move from there. So the market might come into here, or the market has come into this other block already, but has not come into here. So most likely, this is what we are going to be expecting. The market will come here, reject small, come here, and then we have our final dump to the downside. So this is what we expect the market to do. The market rejects off other blocks because that's where orders have been gathered. So when orders are gathered at a particular point, there is a lot of money there, a lot of orders. It's money. When you place your order, it's money you have staked, right? So there are lots of orders there and a lot of money there. The market hits that point and then needs to go back to touch that point and then fall or go up from that point. So I hope you're able to learn something from today. If you have not subscribed, kindly subscribe so you don't miss the videos we drop every week. We drop at least 2 videos every week. Kindly subscribe so you don't miss any of these videos. Like this video, please drop a comment in the comment section below. I just want to share something nice. I just want to build a very good community. And I want you to know that let candlestick and price action always be the judge. I want you to go and do your research more on other blogs because I want to see you better. If you have any questions on that blog, just drop it in the comment section below and tell me any topic you want me to talk on the next video. And I will definitely be talking about it for you guys. Till I meet you guys in the next video, it's peace out. Bye.